Tesla's Nevada approval for paid robotaxi service in Las Vegas opens a regulatory pathway that Canadian investors can monitor for similar U.S. state-level catalysts in autonomous tech holdings. This is Modern Investing Techniques, episode 146. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. The S&P 500 closed at 7,676, up 0.5%. The Nasdaq Composite finished at 26,183, up 0.4%. The TSX Composite closed at 36,578, up 0.6%. TSX futures edged higher on gold prices and ahead of domestic retail sales data, while global bond market jitters lingered. The Bank of Canada and Fed policy paths remain the key macro backdrop, with markets pricing limited near-term moves amid reassuring core inflation readings. The rate cycle open question of timing for next moves now sits alongside fresh fiscal consolidation signals that could influence how rate-sensitive sectors reprice. When a stock you own starts falling, the original thesis does not change what happens next. You still must ask why it declined and whether that alters your view. Today's market conditions make this relevant because single-name moves in tech and energy often occur on news without immediate earnings misses. That forces quick decisions on whether to exit or add income via covered calls. Implement it by setting a predetermined exit level in advance. Then classify the drop as bad earnings, bad news, or broader market pullback before deciding. If the bullish view remains intact, hold and consider selling covered calls for extra income. If fundamentals have changed, sell. Historically, this approach has worked best in volatile periods when volume confirmation is absent, reducing emotional exits. The risk is holding through genuine deterioration while waiting for confirmation. About 14 days ago, we picked MU on a valuation screen that spared the worst of sector selling and closed up 5.12%. Today's AI infrastructure developments continue to test whether CapEx momentum persists. This is a simulated trade for educational purposes only. No real money is involved. This is not financial advice. Today's practice investment update monitors TSLA on the Nasdaq. The catalyst is Nevada Full Autonomous Vehicle Network Company permit approval clearing paid public robotaxi service in Las Vegas. The technical setup watches for volume above the 20-day average on any retest of recent support near the 50-day moving average. Risk assessment sets a stop on break below the low of the approval day, with maximum acceptable loss capped at 8% of position. The target is plus 4% to plus 8% on sustained follow-through if service launch timeline confirms. Confidence level is medium because the regulatory catalyst is confirmed, but broader tech rotation and volume confirmation remain pending. This setup demonstrates waiting for observable regulatory milestones before committing capital, rather than anticipating them. It shows how to define invalidation around a specific permit or launch event instead of price alone. Listeners learn to size smaller when sector rotation signals are mixed, even on positive news. Yesterday's trade reviewed QEC.TO on a catalyst entry tied to Quebec gas policy progress and HCCO technology updates. The actual hold ran 4 calendar days from Monday open to Friday close. Entry came at 0.27 and exit at 0.26. The result was a loss of 3.70% or $37.04 on a $1,000 position. The policy catalyst produced limited follow-through once broader market volatility took over. The new rule requires both a fundamental catalyst and a volume spike above the 20-day average before committing capital to policy-sensitive names. Imagine you bought a TSX Energy name yesterday on a futures bounce and your market order filled at the open. What actually happened between the click and the fill price is that the bid-ask spread widened from 3 cents to 12 cents in the first 90 seconds as retail orders piled in ahead of retail sales data. The pro tip most retail investors miss is that a limit order placed just above the prior close would have captured the spread tightening once the first institutional block printed. Professionals always check the order book depth and recent average true range before choosing market versus limit on any name moving more than 1.5% pre-market. The concrete misconception to avoid is assuming your broker's best execution guarantee protects you from paying the wide side of the spread on fast opens. The fix is to default to limit orders on any position larger than 0.5% of your account when the 20-day average true range exceeds 2.5%. Options Play provides a structured checklist for deciding whether to exit, hold, or overlay covered calls after a stock drops. It gives investors an edge by replacing emotional decisions with a repeatable process that separates news-driven drops from fundamental changes. Intermediate Canadian investors managing TFSA positions should use it when any single name moves more than 5% intraday. Access it directly through the Options Play website or app with a free tier that includes the core exit strategy module. Walmart will roll out contactless payments, including Apple Pay, across all stores by year-end. This development supports consumer sector names that benefit from seamless payment infrastructure. Add WMT to watch list for any post-rollout volume confirmation above its 20-day average. Nscale is targeting up to $3 billion in a U.S. IPO that could launch as early as September. Investors can watch for secondary effects on data center and power names once the filing details emerge. Hold CAD cash with no rotation signal yet into pre-IPO infrastructure themes. Roots has entered an agreement to be acquired by marquee brands in partnership with Canadian retail operators. The transaction removes public market volatility for current shareholders. Review any root.to exposure ahead of the close and consider tax loss harvesting if held in a non-registered account. Canadian large cap leaders Split Corp announced a 0.18 per share distribution payable September 14th to Class A shareholders of record August 31st. This provides a concrete income event for holders of the ticker. Confirm record date eligibility in any NPS position before month end. Open your brokerage platform, pull up the order book for any TSX name you own, and note the current bid-ask spread versus its 20-day average. If the spread has widened more than 50%, switch your next rebalancing order to a limit instead of market. The show used to quote a cumulative alpha figure across roughly 45 trades. It is gone from the scoreboard, and that is deliberate. From August 18th, 2026, every pick is scored under one written rulebook. Entry occurs at the first session open on or after the pick. Exit happens at the stop or at the fixed horizon. One position, $1,000, no discretionary exits. Lifetime totals show 52 total trades and a win rate of 54% with 28 wins, 23 losses, and 1 break-even. Cumulative P&L stands at $277.08. Matched window alpha versus NASDAQ is negative 1.7% across one rules-based trade. This record began 2026-08-18 under the published rules. Earlier trades are history and are not blended into it. Too few trades to call an edge. A scoreboard, not evidence. Average return per trade is 0.53%. Best trade reached plus 20.11%. Worst trade reached negative 11.80%. Current streak stands at 2 losses. Before we wrap, watch for volume confirmation on the TSLA regulatory catalyst in the coming sessions. That's it for today's Modern Investing Techniques. The resources page has links to everything we discussed. Subscribe and share with someone who wants to go beyond index funds. See you tomorrow. And if you'd rather watch than listen, find us on YouTube at NARA Network. Links in the show notes. And before you go, this show is part of the NARA Network, a family of daily podcasts on tech, science, and markets, each one a short, sharp briefing you can finish on the commute. If today earned its place in your feed, here's your next listen. SpaceX Daily, the daily companion for following SpaceX as a public company, from Starship to the stock ticker. Find every show free at naranetwork.com. And on the website, every episode's visuals live in our free image gallery at neranetwork.com/gallery, royalty-free under Creative Commons. Download with attribution. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about all the times that you didn't laugh?